The silver market is about 1 billion ounces a year of supply, and demand currently in the last few years has been from 1.15 to 1.2 billion ounces. So we're using up about 15 to 20% more than we're producing every year. Or when I say supply, really the supply is about 85% from mining, about 850 million ounces, and about 150 million ounces come from recycling. So total billion ounce supply every year, total demand about 1.15, 1.2 billion ounces a year. So this shortfall of anywhere from 10 to 20% that we've seen over the last 4 years and is forecast to be sustained again this year, that's going to mark the 5th year in a row that we've been going through a structural deficit. I think that I actually hope that this consolidation will continue a bit and that we may even see a bit of a smallish correction. I think that would be the healthiest thing for this market. It is quite solid and quite strong, and I do believe that it's very healthy. The last few times that we were at these price levels, if we look back a decade or a decade and a half almost, things had gotten ahead of themselves. And then after that, it was in correction mode around, those high 38s or even 30s. So this time we've gotten there much more gradually, and I think this is a clear sign of a growing bull market and much higher prices to come. But as you said, we ran up 30, 32, 34, 36, 38, up to 40 even in the futures prices, and now we've corrected back to 37 and change. I really think that we're due for at least consolidation. My ideal would be to see a little bit more correction, frankly. A couple dollars off of the price would be very healthy. That may, take a little while longer, a few more weeks, maybe a month or two, probably not even that long. But that would be the best thing. And then we would probably continue to head considerably higher through the rest of the year.
Hitting $40 in futures was a milestone many predicted years in advance. Now that silver has tested those levels, the question is, where next? Some forecasts see $40 holding firm this year, with potential spikes toward $45 if unexpected black swan or gray swan events unfold, geopolitical shocks, supply disruptions, or surging industrial demand. The all-time high near $50 remains within sight, likely in 2026. For investors, these price levels are no longer distant dreams, but plausible scenarios, given tightening supply, industrial expansion, and the persistence of market deficits.
I think that we're going to see probably something along the lines of, and it's not a stretch, but $40. I've been saying for probably since at least the beginning of this year, $40 was very likely at some point in the second half of 2025. It was less obvious back then. It's more obvious now since we've all already touched it, but that was my feeling then, and I think it's very realistic still. I also think that, things pick up and they could well, for, different reasons, some black swans and some gray swans to come would potentially bring silver to perhaps $45 sometime before the end of this year. I'm not sure that it would necessarily stay there, but the all-time high of $50 I think is very much within range, but probably at some point only next year. That's been my expectation for some time, and I still feel that way about where silver could be going. The structural deficit, according to the Silver Institute, is pretty significant. It started back in 2021. I'm looking at their numbers right now. There was a deficit of about 80. So again, for your readers to just get a very, big overview.
Since 2021, silver has been in a structural shortfall, demand consistently exceeding supply. Global output averages 1 billion ounces annually, yet usage runs 15 to 20% higher, creating deficits of up to 200 million ounces. Mining covers about 850 million ounces, with another 150 million from recycling, leaving a persistent gap. For 5 straight years, the industry has drawn from above-ground inventories, including COMEX, LBMA, Shanghai Reserves, and ETFs. These stores are finite, and their steady depletion raises urgent questions. How long can silver's hidden reserves cover the shortfall before scarcity drives prices much higher?
The silver market is about 1 billion ounces a year of supply, and demand currently in the last few years has been from 1.15 to 1.2 billion ounces. So we're using up about 15 to 20% more than we're producing every year. Or when I say supply, really supply is about 85% from mining, about 850 million ounces, and about 150 million ounces come from recycling. So total billion ounce supply every year, total demand about 1.15, 1.2 billion ounces a year. So this shortfall of anywhere from 10 to 20% that we've seen over the last 4 years and is forecast to be sustained again this year, that's going to mark the 5th year in a row that we've been going through a structural deficit. And, you know, Elijah, you and I have talked about this before. Where is the silver coming from? How can you run a deficit this many years running? And so last year I started to dig into that and I came to the conclusion that especially industrial consumers of silver, which absolutely need their silver, investment demand is one thing, although if people really want silver, they're going to pay for it and probably find it somehow. But the industrial applications in many cases are either very difficult to substitute or it's irreplaceable. So that's very much the case in a lot of silver applications. So as far as I'm concerned, industry has been able to tap into these secondary supplies of silver, which, you know, maybe for about a decade prior to 2021, we were on balance producing more silver than we were consuming.
Industrial sectors are the real engine of silver consumption. Last year, industry alone consumed nearly 680 million ounces, 2/3 of all mined and recycled supply. Solar power accounted for about 20% of this demand, and new data shows installations, especially in China, are accelerating at record pace. Add the rise of 5G networks, EV production, and AI-driven data centers, and silver's role as an irreplaceable industrial metal only grows. Forecasts suggesting flat demand seem outdated. Instead, the evidence points to rising industrial appetite, tightening the squeeze on already fragile supplies.
And that has flipped completely. So this excess silver had been accumulating in inventories, which are mostly, at least identifiable inventories, are the COMEX, the LBMA, and Shanghai. Those are the big ones. You've also got private hoards of silver that's owned privately, which, you know, accounts for probably a few billion ounces as well. So I think what's been happening is that these industrial consumers have gone to these secondary inventories, the futures markets, and even to some extent to the ETFs, and have been basically drawing down from there. So they've been able to access, I'm going to say, excess supply, because this is above ground inventories that are just sort of sitting there. They've been able to access this supply, draw it down, buy it at prevailing market prices without putting pressure on miners and recyclers to bring additional supply to market. And I think that's why we haven't seen silver really truly break out, you know, go beyond sort of this $45, $50 level, which will be the true ultimate breakout. That's where I think the supply has come from, and it hasn't, as I say, put tremendous pressure yet on the silver price. But I do think that that's coming, and that's really, you know, what makes silver very undervalued and perhaps one of the most undervalued assets right now, and, you know, bodes very well for the future, both for the metal and for the miners that look for it and produce it.
Some argue private investors or stackers will release silver back into circulation once prices rise. But at what levels? Few are willing to sell at $35 or $38. For many, $50 just the beginning, with real liquidation only at $60 or $70. This makes silver unlike other commodities. Its most loyal holders refuse to part with it cheaply. Combined with ETF drawdowns and shrinking inventories, investor behavior ensures that supply relief will come only at much higher prices, fueling the very rally that buyers and industry are trying to contain.
Industrial consumption has been going up. The Silver Institute is forecasting that this year it's going to be slightly down from last year, total industrial consumption. But consider this, total supply last year, if you forget about secondary inventories, just supply from mining and recycling of just about 1 billion ounces, yet industrial alone was 680 million ounces. So 68% of all of the mined and recycled supply went strictly to industrial uses. And photovoltaics, which is solar, represents 20% of demand of all of the supplied silver every year. So this one application is 20%. The Silver Institute thinks that we're going to see solar kind of the demand from solar for silver kind of flatline, and industrial demand as well overall more or less flatline this year from last year. I think that's going to turn out to be wrong. I think that they're underestimating the demand. I can point to things like, well, you talked about AI and data centers. I saw some numbers recently about solar installations in China. And because of government stimulus, it's gone through the roof in the first half of this year, and it's gone well beyond. I think that the first half of this year has already surpassed last year, all of last year, in Chinese solar installations. And as we know, they're the biggest producers of solar, the biggest installers of solar. So that really suggests that demand for solar will continue to go up, and the required silver along with it.
Silver mine supply peaked in 2016 at 900 million ounces and has since declined to around 835 million. Meanwhile, deficits are at record highs and above-ground inventories have dropped nearly 70% in just 4 years. The Silver Institute projects these deficits could persist for another 5 years or more. That paints a bullish picture: stagnant supply, rising demand, and dwindling reserves. For investors, silver remains one of the most undervalued assets of this decade. The question is no longer if silver will break out, but when, and whether the next rally will stop at $50 or push far beyond.
There's always this argument that, we're not going to run out of silver. There's plenty of silver that's being held by private investors, and that they will, so to speak, dishoard their silver as the market requires. And I don't disagree with that. I guess where I disagree with some observers or analysts is the price level at which these people are going to be willing to sell their silver back into the market. And these are many cases what we call stackers, silver stackers, and they're adamant about buying and holding on to their silver. They're not prepared to let go. Many of them will not let go at any price. But I'm willing to admit that you will gradually get high enough prices that will have them, sell their silver back into the market and help provide supply. But I don't think it's at $33 or $35 or even $38. I think it's going to be a lot closer to $45, $50, $60, and $70 that we're going to see that supply come to market. So, and that's, that speaks to your question, which was, what that's going to do for silver. Well, I believe that we will get this demand met to some extent, at least, not fully probably, but to some extent it'll be met, but at much, much higher silver prices. And that's where silver needs to go if you look at these structural deficits, because these secondary inventories are down about 70% over the last 4 years. And there's no sign of that ending. In fact, the Silver Institute themselves have said that, that was, I think, in this year's silver survey, annual silver survey, they said that they thought that we're going to see these structural deficits continue for at least the next 5 years, and that we would probably see new record deficits being set along the way, because mine supply has just been completely incapable of bringing out any meaningful new growth to silver. We peaked in 2016 at 900 million ounces of silver from mining. Today we're at 835 million ounces, and yet we're facing bigger deficits than we've ever seen. So, It's tough for the industry, but it's fantastic for investors.